Hello and welcome from Trend Signal for our review of the data and events the week beginning the 29th of September. New week and obviously the end of September on Tuesday, in fact the end of the third quarter on Tuesday, so often results in a little bit of turbulence as fund managers, etc., adjust positions ahead of the end of the quarter. Important week, though, the first week of the month. We have it's non-farm payroll week in the US, or to you and I, employment data in the US. Equities start the week on not such a strong position, really. We had a late rally on Friday afternoon, evening, following the positive GDP revision. But the pro-democracy rallies in Hong Kong seem to have spread a little bit, and I think have unsettled the Hang Seng and other Far East markets. So, as I said, volatile week for global equities. All the main benchmarks fell sharply, really. US markets were probably the most volatile, with triple-digit moves on the Dow, for example, in the last 3 days of last week. European equities were actually the standout fallers, though, as weak German business confidence undermined European equities, actually, and the euro. In fact, the other standout move, talking of the euro, was the continued appreciation in the US dollar versus the majors, especially euro and sterling. So last week's moves, for the numbers, FTSE fell 188 points, about 2.75%. The S&P, conversely, not as sharp fall, in fact half that sort of fall, 28 points down on the S&P, which is about 1.4% lower. The Dow Jones, that ended 184 points down on the week, just over 1%, but the DAX was the standout faller, down 293 points on the week, about 3% there. As for the US dollar rally, that can be seen with the euro versus the dollar, that fell another 144 points last week, or just over 1%. Cable, that fell not as much actually, about 0.5 cent, around 0.3%. The dollar, euro dollar, dollar yen, that continued to appreciate with the dollar, with the euro, with the yen falling further, 27 points, about 0.25%. Actually, we can see it in the dollar index, really. That rallied another 85 points, or just over 1%. And the dollar index has actually hit the highest point since July 2010. And that was at a time when the US dollar just had a fairly sharp fall. Okay, so let's get on to this week's data. A big week for US markets, as I mentioned earlier on, and I guess in consequence, global markets, really. Employment data is key because it's one of the Fed's mandate, and it does affect monetary policy, and its effects are felt not just on the day, this Friday, but also in the weeks to come. And it certainly looks like the US economy continues to gather strength. We also have the ECB monthly policy meeting this week, and also various manufacturing and services PMI data. Good. Okay, without further ado, let's have a look then at the data coming out this week. Just refresh it and get a better view on it. The first bit of data, really, of any note is on Tuesday, so very little to speak of on Monday. But we've got the inflation data in the Eurozone, which has been a particular problem for the ECB as it tries to counter the threat of deflation. As we can see, the last month's data was plus 0.3%, which is getting tantalizingly close to moving into negative territory. But I think the depreciation in the euro that's really gathered a pace over the last 12 weeks will start to put upward pressure on inflation, I suspect. But it'll be interesting to see where this data comes out, and that the market is particularly sensitive to that, and that will have a big effect on bonds, Euro Stoxx, DAX, and obviously the euro itself. We then jump to consumer confidence from the US, 3 o'clock in the afternoon. Pretty much unchanged number from the previous months, actually, at 92.2. We then have on Wednesday a bank holiday in China, Wednesday and Thursday, so the Far East markets may be fairly subdued Wednesday, Thursday. But Wednesday we have quite a bit of data out. We've got our own manufacturing PMI here in the UK. And then we've got the first reading of the employment picture in the US with the release from the private payroll company ADP, who released their own data from their own services they provide to private companies. That comes out at 1:15. I have seen expectations for anywhere from sort of 205 up to about 220. In fact, the general feel is that it's going to be an improvement from last month's number. The ADP data tends to be a little bit more volatile, though. We then have the ISM manufacturing PMI for the US as well at 3 o'clock on Wednesday afternoon. So quite a bit of data coming out on Wednesday. Thursday, well, big day for us, for the Eurozone, in fact, is the conclusion of the monthly monetary policy meeting for the European Central Bank. No change expected on rates. Obviously, we had that cut a couple of months ago, but the press conference, they made comment about the TLTRO, the attempt to one of their monetary policies, which failed miserably in its take-up. That didn't go particularly well, so we may get some feedback on that and perhaps what the ECB may be looking to do. And it looks like the possibility of quantitative easing moves nearer and nearer to one of the policies for the European Central Bank. Weekly unemployment claims on Thursday, but then we come on to the main event of the week, as said at the beginning, which is the US employment data called non-farm employment change, out at 1:30. 216,000, looking for a rebound from the rather surprising fall or weak data the previous month. There are some rumours of a bigger number than that as the US economy continues to improve. So that'll be watched very, very closely. Employment rate at 6.1%, but the key one is the employment change. So keep your pencils sharp for that. Thank you very much for listening. Bye for now.